You're watching Morning Markets on BNN Bloomberg. It's time now for a hot picks. During this time, we bring you hot picks from an investing professional on some of the stocks that they are most enthused about. Today, we're focused on the sustainability sector with Lenka Martinek, managing partner at Sustainable Market Strategies at Nordis Capital. Lenka, thanks so much for being with us. Before we get into your picks, sustainable investing has a lot of different definitions depending on the PM that's kind of running the book. What is your definition and your approach?
So you're absolutely right about that. ESG has had a bit of a bad rap in 2021, and sustainability is kind of caught up in that as well. From our perspective, what we are looking for are companies that can positively contribute to the solutions that we're going to need in order to turn our world into something that is low carbon, and what we call sort of high care. So we're looking for companies that have products and services, namely with solutions. And then, of course, on the short side, we're looking for companies that are not going to be part of the solutions to some of the themes, the ideas that we think that we're going to need to have to bring to the table in order to make this transition, primarily from an energy perspective, but also through biodiversity and other areas as well.
It's we interviewed last week noted short seller Carson Block, who's increasingly turned his focus on the ESG sector, saying it's one of the biggest, one of the best short opportunities that he's seen since the days that he was shorting China, because so many companies are, not doing, I guess, what they're supposed to be doing when it comes to ESG. Have you come across that? Is that very difficult to, or how do you differentiate between those that are under the guise of ESG and those that are actually executing?
Yeah, so absolutely. So that's actually part of our strategy. What we want to do is penalize companies, penalize the stock price of companies who are greenwashing or, as I mentioned, doing things that are detrimental to what would fall under the sort of categories environmental, social, and governance. And we want to reward companies that are doing good things. So we do think that 2023 is going to be a year where greenwashers will be particularly punished, given everything that went on in 2022. So actually, my first pick this morning is actually a short greenwashing idea, because we do think that there are some companies that if the reputational harm from pretending that you're something that you're not is going to lead to bigger financial consequences at this point than we've seen in recent years in terms of the ESG movement.
Okay, let's talk about that. Enviva is the idea. It's a it's wood chips and wood pellets as fuel, basically. Sounds like a great idea. And what are you cautious about on this one, and why are you short?
Sure. So Enviva is a company, I would call it a controversial company within a controversial industry. So the stock price is already down about 30% in the past 6 months, but we expect it can continue to fall quite a bit. It has maybe to around $40 a share. The reason, I'll get into some of the reasons about it. Enviva is it is the largest wood pellet manufacturer in the world. And they're actually facing a lawsuit currently for greenwashing, as well as misleading investors regarding its financials. So it's a short pick for us, both due to its awful sustainability credibility, as well as its financial situation. But for investors that might not know very much about wood pellets, the industry itself is a bit prone to scandal. The reason for that is that wood pellets are actually considered a renewable energy source simply because they're made from trees, and forests can obviously be regrown. So they're classified under the 1992 Kyoto Protocol as sustainable. But the controversy lies in the fact that many scientists will say that the only way that wood pellets are carbon neutral is under very optimal conditions. Actually, many people will argue that there's absolutely no difference in terms of carbon dioxide by burning biomass, so trees, versus burning coal. So it really ends up being about how you do your process, what exactly you're doing when you're creating wood pellets, and that's where the problem lies for Enviva. Okay, so how nimble do you have to be shorting this one? A dividend yield of 7%, and remember, when you're short, you have to carry the dividend, and already a pretty high short position of 20% of the shares outstanding short, and this could be a risk if you're short, because if there's any even little bit of positive news, it could force a short squeeze. Yeah, so actually, let's start by saying that I think one of the first things that we need to recognize is that basically all of they're selling shares currently and issuing debt in order to increase that dividend payment. So that's probably the first thing that we're going to see that falls. They have not actually produced a positive net income in the past 3 years. So I think that that dividend is at risk. So from a financial perspective, there's already quite, I think, some pressure building. And the company itself, I think the real trigger here is that in Blue Orca is an activist engaged investor, basically has started the process for a lawsuit on greenwashing. That lawsuit will unfold in 2023, and essentially they are being taken to court both because of their misrepresentation about their financials as well as their sustainability record. So I think there's quite a few catalysts there.
All right, interesting pick. Let's go on the long side. Carrier Global, home appliances.
Yeah. So for us, this is a theme about energy efficiency. We really think that 2023 is a year. We saw that in 2022, energy scarcity was a big factor in driving markets. When I say energy scarcity, it was just basically this idea that Europe could not get enough energy. We've seen a lot of that path, but what we've also seen is that there's a lot of fiscal policy now that's really building to support energy conserving products and services like heat pumps, high efficiency HVACs, et cetera, et cetera. So just from a subsidy perspective or a fiscal policy perspective, energy efficiency is one of the very few areas in 2023 that we think is going to be well supported. So we have things like the Repower EU plan out of Europe, the Inflation Reduction Act, which is offering subsidies up to $14,000 per household. So this is really the sort of long-term trend that we see unfolding in terms of the stimulus that could come to the energy efficiency sector. In terms of Carrier, we know that Carrier is a leader in energy efficient heating, air conditioning, and refrigeration systems. So, for example, they were the first company in the industry to phase out ozone depleting refrigerants. So from a sustainability credibility perspective, I think it's quite high. The stock is trading as a value company, so PE around 11. So quite interesting, I think, from a financial perspective as well.
So you can like a stock for its ESG criteria, but when they're in something like HVAC, how do you account for the factors that it might go up for other reasons? It seems like it's linked to the economy. It seems like it would be linked to a slowdown or a rise in the housing market. How do you invest because of its ESG characteristics, but understanding that it might move because of other economic factors?
Yeah, so what we've basically done is we've created a universe of stocks that we believe are going to be winners or losers from these thematics that I've been discussing, whether it be energy efficiency, whether it be different sources of renewable energy, whether it be labor concerns, things like this. So we have a universe of stocks, and then we're going to be overweight or underweight them or have a position in them depending on the business cycle, because we're really thinking about sustainability from a macro perspective. And so a company like Carrier, we're going to marry where we are in the business cycle, with its ESG prospects. And from an ESG perspective, we're really looking at both the product and service. So that would be like the sort of the impact that their product and service can have, as well as how they operate. Are they a healthy employer? Are they doing good things for the community, et cetera, et cetera? We call that in sort of the ESG jargon double materiality. So both an ESG perspective as well as an impact or a product and service perspective.
All right. We do have to end, but I can't end without getting Nutrien because it's your Canadian pick. Your long Nutrien. This one has come off big after a big rally in 2021. What's your bullish thesis?
Yeah, so here the idea here is food security for the long term. Obviously, fertilizers is another one of these sectors that's pretty controversial. There are lots of things that can be wrong with fertilizers and fertilizer companies, notably that we tend to overuse them. They can be very toxic in some instances, et cetera. So not everyone is going to agree that fertilizer is a great sustainability pick. But from our perspective, what we know is that the world is going to need to feed about 10 billion people by 2050. And we want to do that in the most the best possible way. So as you well know, Nutrien is a company that produces potash, nitrogen, and phosphate, things that we need, the main ingredients in fertilizer. And actually, they're doing it in a pretty sustainable way when we look at their peers. So just purely by operating in Canada, we have to have confidence there will be stricter regulation.